Welcome. This is Brian Lowery from the Graduate Stanford School of Business, and I'm here today in the Leadership for Society series talking to Isabel Guzman, former administrator of the Small Business Administration at the federal government, U.S., from 2021 to 2025. Is that correct, Isabel?
That's correct.
Fantastic. Well, it's really great to have you.
It's great to be here with you, Brian. Thanks for hosting me here.
Yeah. Can you tell us what the SBA does?
Sure, sure. The SBA was started really on this principle that we need innovation, we need competition. We want to make sure that we can diversify our industrial base so that we can strengthen, the country. And SBA was created to make sure that entrepreneurs, small businesses could succeed, so they could be part of that industrial base. And in particular, it was under the Eisenhower administration. So you can imagine post-war, they were really, thinking about that, defense industrial base as well. And President Eisenhower was really concerned make sure that we really had that diverse supply base to continue to innovate and continue to create competition in the federal supply chain and beyond. And so really that was the beginning. And we started with access to capital, one of the barriers that small businesses face in trying to do business and grow their business and deliver on contracts. And we, of course, started with contracting programs to make sure that the federal spend was directed towards small businesses. And so the SBA had those historic legacy programs that they've been operating to really help deliver capital, both loans, bonds, investments, to businesses, as well as contract opportunities. And we've expanded to include growing with trade opportunities abroad, ensuring that small businesses could survive disasters, build resilience, and the communities could survive disasters and build resilience, but with great affordable loans to fill gaps in insurance that's in the marketplace. So really, the agency is tried and true, stuck to its mission of helping businesses start, grow, and be resilient.
One thing you just said struck me, and I don't think maybe people know that much about this in particular. You said you help individuals survive disaster. Can you say a little bit more about that?
Yeah, it's usually surprising, especially for those communities that don't really face multiple disasters over and over. But SBA does step in alongside FEMA day one to ensure that communities can recover quickly and offering these affordable, long-term, low-cost loans to fill insurance gaps in the marketplace and capital gaps. And that is to homeowners, renters, as well as those businesses, nonprofit and for-profits. And so it's a very different product. It's a direct loan of the SBA. SBA, usually works through public-private partnerships. We work with an investor network. We work with a lending network to get our products out the door, whether they're guarantees or leverage from the government. But this is very unique. This is a direct loan from the federal government to ensure that businesses and the communities can recover because businesses need their employees. They, need their customers to be able to rebound just as quickly as they are.
hmm Well, businesses need a lot of things to succeed. So we might come back to that in a second. But what are some of the perennial issues or tensions that the SBA faces? Any government agency has a lot of challenges given the scale and scope of what you're trying to do, what you just described.
Yeah.
So, what are some of the perennial issues or challenges that you face
Yeah.
at the SBA?
Well, I'll tell you, it was really truly my honor and the privilege of a lifetime to be able to serve as the administrator of the SBA, especially during that time of COVID and economic recovery and a subsequent small business boom that surged small business applications and business establishments in this country for the last several years. And so, during my tenure, it was an unusual time to serve. The SBA had scaled to support the COVID pandemic response, really deploying in total across the entire COVID pandemic 1.2 trillion in relief for an agency that typically does about $50 billion in supported capital every year. And so this was a tremendous surge. And so I walked into an agency that was in the middle of PPP, in the middle of COVID EIDL, that economic injury disaster loan, and in stepping into an environment where the programs were put out with speed as the priority that first year in 2020. And we needed to right the ship and correct for some of the problems and challenges around fraud. And so really inheriting this, what became a $500 billion portfolio overall delivering on the entirety of the forgiveness of PPP and really trying to leverage the scale of the agency to better support small businesses on an ongoing basis. And so, truly it was a really remarkable time to come in with for the agency. The agency was facing unique challenges and having to course correct and not just look at speed, but certainty, ensuring that the funds were getting into the hands of the businesses they were intended to serve. And we made some major investments in technology, completely reorganized, restructured all of the departments to ensure that we were better performing and more efficient, and streamlined regulation processes, you name it, as well as launched 7 new pandemic programs like for restaurants and shuttered venues, et cetera. So it was really a tremendous time. So the problems we faced were, problems of scale, of really, scaling up in terms of employees, technology acquisition, everything to really meet the needs of every business. Because when the federal government performs, it doesn't get to target market, it doesn't get to pick its, segmented markets. It must serve every American. So really, being able to roll out at national scale was our challenge of the moment, and course correction as well in those programs.
I was saying that really was an amazing time for a variety of reasons. I don't know if amazing is the right adjective, but it was certainly a unique time. But it raises interesting questions. So all of a sudden, there was a huge need for support, and a lot of that came through SBA. But there was a lot of concern about fraud, even after the fact. How did you think about, or how do you think about the balance between regulations to make sure that things are being done in a way that serves the communities and the right people, um, and speed, right? So getting things to people when they need them. How did you think about managing that tension?
Mhm. Well, I came to the SBA and I asked, first off, that we be as entrepreneurial as the small businesses we serve, who've had to pivot and adapt during the pandemic in particular, and making sure that we were willing to completely rethink and transform the agency to better meet the market where it was today. And so, with that lens, I leaned into focusing on a customer first approach and a technology forward, and really through those lenses being able to achieve broader reach and access for Americans interested in starting businesses or growing their businesses. And I do think that the agency was under tremendous strain trying to deliver these programs, and with some specific requirements, for speed that really made it impossible not to, assume a certain amount of fraud levels. But that needed to be corrected immediately. And so I really, for me, it was a race to address the fraud concerns so that I could deliver on the promise of forgiveness, which PPP, had promised all these small businesses a forgivable loan, but clearly with fraud happening at the time of inception of disbursement of that loan, we needed to do a lot of work to bring some more certainty in that process. And so, really, I asked my team to remember the fact that this was, deployed during speed, but course correct. And, frankly, we were able to do that. I know that there's still numbers thrown out there on fraud, but we're talking about fraud at inception when, in 2020, those funds were just flying out the door. Remember that the federal government didn't even require that the SBA not even ask for tax documents in doing direct loans. So imagine telling a bank, sorry, you can't even look at tax docs. You just got to get the money out the door. Without any validation of income, et cetera. And so it really was a challenge for the agency. But the being able to course correct, we really did address the fraud. The large numbers that have been put out there, we were able to leverage AI and machine learning to be able to review the entire portfolio, as well as thousands and thousands of manual reviews that inform that process to identify fraud, refer fraud, and help our inspector general go after fraud. But you see in that process that the pendulum could have swung too far in the other direction. I think that's always the case. That when you look at any regulation, it's use cases or instances of of, taking advantage of a specific program that really leads to sometimes an overcorrection in regulation. And so, my emphasis was on maintaining this approach that we still had to simplify for our small businesses. We still needed to leverage technology to ease some of those pain points in accessing federal programs, and that we had to challenge ourselves to do both, speed and certainty. And
Hmm.
the Restaurant Revitalization Fund program was the program that I rolled out completely under my tenure. And we leveraged incredible technology sources to speed data transfer to the agency to verify these applications. We used Square and Toast and Aloha, who were able to help their restaurants apply for these Restaurant Revitalization Fund program grants. And so we were able to achieve a mobile-friendly, simple application that took less than 30 minutes, and really challenged ourselves to not overburden the small businesses, but at the same time, leverage the technology and resources and data sets that are out there to check for fraud.
Hmm. One of the things that I remember reading about, this might have been early on and during the pandemic when loans were just starting to roll out, is that you have private-public kind of partnerships, and some banks were helping actually manage some of these loans. And there was a claim that banks were giving preferential treatment to certain customers, and so it was making it difficult for some actually much smaller business to get access to the loans. How do you think about managing that public-private leader partnership? That's just one example. I mean, SBA is a government organization. It's not a private for-profit organization. And I guess I'm trying to understand the tensions that
Mhm.
occur when you have these public-private partnerships.
Yeah, and it's a historic, public-private partnership that's worked effectively. It's a zero subsidy program where we partner with banks and lenders to guarantee loans, backstop these loans, anywhere from 75 to 95%, so that they can get out there and put the money out the door. And PPP, that Paycheck Protection Program, was built on that platform of allowing, the lenders to be that front door for the borrowers to come in. COVID EIDL was the direct loan from the SBA. But I think this is a tremendously large issue that will affect our ability to really continue to spur entrepreneurship in the future. I think that we need to diversify the capital lenders that are partners that are in the SBA's database or lender base. And we have during PPP, of course, it was expanded. It grew from around 1,500 lenders using SBA programs to over 5,000 lenders who stepped in to provide PPP. So that it wasn't, we allowed fintech to come in, and some of those fintech providers did an excellent job of getting to the smallest of the small and do those small dollar loans as well as, into communities that were left out and left behind. So, that was the number one priority is how do we shift the program not only to create certainty in terms of fraud, but as well, how do you, in addition, get it out the door into those businesses who were left behind? Because that definitely happened. I mean, the banks were, and the credit unions and the nonprofit lenders that were in SBA's networks were, just really hustling to try to get those dollars out the door. And, they with KYC requirements and everything else, they started to with their customers first. And I can't speak to how they prioritized, but clearly, many people were left out. Studies showed, that especially minority communities, rural communities, those smaller entities were not able to access these programs. And so I think increasing competition, talking about what the SBA's purpose was, increasing competition in the lending base is an important component of ensuring that more people can access capital. You saw it finally be effective with PPP as more lenders came on, as mission lenders were incentivized to be able to put these loans out the door. And, that's what those learnings, really inspired us to be able to expand competition within SBA's lending base, remove a hold on small businesses lending company licenses, for example, at the SBA to allow new lenders back into the SBA's program. SBA doesn't is a regulator of its own lenders, whether they're community development corporations or it's nonprofit lenders or just non-bank lenders who have licenses to use the guarantee. And so I think it's incredibly powerful example of how a more diversified base of people in capital markets were coming into the SBA's program to provide this assistance. And the SBA is back down to its normal levels, but we did increase the number of lenders during SBA doing traditional loans, and that's how we increase small dollar lending. That's how we increase lending to some of those same communities, rural, veterans, minority communities that were left out from early rounds of PPP.
Hmm. So you mentioned a couple of times like socially disadvantaged or economically disadvantaged communities and small business owners. And my understanding is the SBA has or has had programs designed specifically to support those types of communities. Can you say a little bit about the role of the SBA in supporting underserved or economically disadvantaged or socially disadvantaged communities?
The SBA program is a gap filler where capital else where those businesses who don't have capital elsewhere. So we really are, trying to ensure that whatever the private market is not supporting in terms of businesses, that the SBA's guarantee steps in to make those loans more feasible in the marketplace. And so, as you can imagine, those are some of those historically disadvantaged businesses that have faced barriers in the traditional lending markets. And so, and that's why SBA defines underserved based on, all the studies that show where you're under indexing, and that's rural communities where they're banking deserts. It's veterans who come out of service, oftentimes without the, capital and wherewithal to be able to have assets to put up for those loans, or and then in addition, startups, just by definition, those, 2 years and unders, because they don't have the revenue base, the history, and so that guarantee is often needed. And then, of course, minority communities and women. And so that's how the SBA defines underserved. That for its lending programs. But there's no, besides for veterans, there's never been like a specialized product for any of those communities. It's just about driving our lender base, driving our products, our fees, everything to try to better serve those communities and all businesses overall. And then, but this social disadvantaged businesses is a definition that we use in contracting. So on government contracting, SBA has had programs as well where, again, you don't see participation. And that was Eisenhower's original vision, was like, how do you attract more small businesses, diversify the supply chain within the federal government. And so SBA has worked hard to ensure that those same groups, women, veterans, and social disadvantaged businesses could come into the federal marketplace. And so it's been a long-standing program, but that's we could spend an hour just talking about contracting. I'll tell you that, because there, of course, issues that have trickled down from the Harvard Supreme Court case, where SBA is not able to presume social disadvantage by race, and so social disadvantage is not a race-defined program any longer. It never was fully. There have always been non-racial minorities within these contracting programs for 8A or social disadvantaged businesses, but they had to prove their social disadvantage. Well, now everybody needs to prove their social disadvantage, but these programs continue to exist.
Yeah, I was just going to ask about this. There's been a lot of pushback for those certain types of programs, like things that people might put into in my mind, not well-defined box of DEI or something like that. And you have the case you just mentioned that came out down from a Supreme Court around Harvard and affirmative action. What how would you defend, or if you would defend, the use of government resources to support certain groups? How would you um, explain to someone why the government should do that?
Well, this is something I worked on in California as well, as at the federal level. I think that as we see the face of entrepreneurship changing, we know that in order for us to continue to grow our economy, to continue to have diverse supply chains and continue to have competition, that we need all of these businesses to succeed. And if, demographics is destiny, we know that, women, Black and brown founders in particular are starting businesses at the highest rates in terms of the population, the K through 12 population, whatever demographic data you want to look at. the trends show that this community, these communities that have been historically underrepresented, underserved, and unable to grow at the same rates as a result, are the ones that we're going to rely on for continued growth as well in our economy. And so I just think for me, it was about solving some inefficiencies. If we, want to ensure that we continue to have strong job creators who are producing for our economy, they need to be able to access capital just like their peers. And, I think that's, for me, solving those inefficiencies would better create, strong performance for the economy overall. And so, I do think that there's differences in how people, come to the table, to a bank or to a lender or to an investor in terms of their own experience, their financial literacy, you name it. And I think there are things that the government should be doing to ensure that we're bringing everybody up with the same skill sets to be able to compete in the marketplace effectively and grow our economy. And so that's part of it. I think that it's a market necessity more than anything else. It's also, of course, a justice and a fairness and an equity issue as well. But for me, that's the real justification. I think it goes back to the very foundation of SBA during the Eisenhower administration.
So you see it as a market, correcting a market failure.
Hmm. That's correct.
And then what do you think about there's one could argue that right now in the entrepreneurial ecosystem, and I don't, you might have a different view on this, there's a lot of attention paid to businesses that are growing really fast, the kind that are venture backed, those types of businesses. And we're in Silicon Valley, so I mean, people, you have a good sense of what that looks like. Do you think that is taking up more, I don't know, let's say air or oxygen in the room than it should be? Like, how do you think about the difference between those really fast growth, high impact businesses that are focused on right now, maybe AI or crypto versus smaller businesses that are like maybe a version of mom and pop shops that grow and have two or three employees? Like, how do we think about balancing that in the economy, and what role does the SBA play in there?
Yeah. Well, I mean, they're all our job creators, but I do think that the government programs in particular, where we're trying to incentivize certain behaviors, we do have to look at certain priorities, and just like the SBA prioritizes educating small businesses on global trade, it's because businesses who trade abroad have typically pay their employees better. They typically have stronger sustainability, and in terms of their revenues, but it's so it's a reason or economic justification for for supporting this. And there's zero subsidy programs anyway, but of course, the very existence of SBA, that's why it's justified. But I do think for innovative startups, by some estimates, I've heard that it's a 5x job creation. That when you have these high growth tech companies, that it's a 5x job multiplier in the economy. And so obviously it's advantageous to be able to continue to spur that activity, but they're not the only job creators. And so Main Street, those businesses, mom and pops, if you want to call them whatever it is, whether it's, MLK Boulevard, Cesar Chavez Boulevard, or Main Street, like these businesses, are critical. They define neighborhoods. They create the, products and services that we love and depend on. And, they are innovators in their own rights as well. So I think they're equally important. Obviously, the SBA has programs for both. We focus on those small businesses as well as innovative startups. And, I do think that, the nation needs to continue to, incentivize and prioritize innovation and growth, but also focus on its neighborhoods, its main streets, and those, small businesses that are critical. And not only that, but they're critical for supply chains, manufacturing, et cetera. I mean, some of those are your stable mom and pop little shops, but 75% of the manufacturers are 20 employees and under. These are small shops that are critical in the supply chains. And so, the services that the SBA provides and should continue to provide are about strengthening both of those segments.
Mm. So that kind of segues into the next question, which is the theme of this course is the intersection of public and private leadership. Can you tell us where you see the biggest potential for collaboration and the biggest points of tension?
Hmm. Hmm. Yeah, I mean, well, clearly the agency that I had the honor of running for the previous 4 years was really a perfect example of public-private partnerships. Whether it's the entrepreneurship training that was all done through private partners, grants were given to universities and nonprofits and others to create accelerators and incubators and small business centers around the country. And you rely on or on the lending network or on the investor networks. Everything was a public-private partnership. I do think that where the government can step in and create these efficient programs like the SBA that are zero subsidy, that for oftentimes are high performing in terms of our loans in particular at the SBA and investments. I do think that that's an advantage because we're going to fill gaps and yet still create some strong economic benefits for society. So I think any of these programs where we can marry business interests with government programs to really spur and strengthen our economy and our democracy, that that's a definite positive. And it helps the government better achieve scale more efficiently. I talked earlier about the fact that federal government can't just pick and choose communities it's going to serve. It needs to serve everybody, every citizen. And so this is every American. And so that is something that the private sector can help us do. And especially the nonprofit sector in addition and the university institutions. So I do think it's very powerful. But there are challenges. I do think there's a lack of understanding, in the business sector, or, even in the nonprofit sector about the challenges in government. And I think you're seeing it play out right now, where there's an assumption that government never works, that it's inefficient, that it's just overregulation is dominant, and I don't think I think that gaining a better appreciation of how policy is made, not just the statutory, the regulatory, but also the implementation, the operations behind implementing policy, would be very helpful to strengthening those public-private partnerships. Because I think if the private partners have a better understanding or appreciation of how government functions, then I think those collaborations could be even stronger. And that's definitely something that I know Stanford and its Business Government Society initiative is hoping to try to advance. But I've been telling people that implementation is where policy can go to die, and understanding how to ensure that policies advance through statute, through regulation, are implemented properly at agencies is something that public private partners can work collaboratively with public to ensure that we're effective.
Hmm. If there was one thing you could ensure that every private business leader understood about government, what would it be?
Um, I think there's so much, but I do think an appreciation that the government doesn't communicate its data in the same way that the private sector does. So it's often harder to understand. You wouldn't know, from SBA, and that's been clear in the last several weeks. It's without understanding those programs, that these are zero subsidy programs. The government doesn't report things in that way, though. It really doesn't, keep a P&L and a balance sheet to be able to really communicate effectiveness in the same way. It's not the way budgets are managed. It's not the way we manage funds with Treasury either. And so, while during my tenure, we were able to return tons of money to the Treasury every year based on our collections and performance of the portfolio, it's that's not accounted for. And so you might misunderstand the strength of a program if you don't reflect on the fact that the federal government just tracks budgets and data differently.
Hmm. And on the other side, if there's one thing that you would wish government would learn from private business, what would it be?
Hmm. I do think the speed and the customer service, having being forced to perform at a very high level to meet expectations. I do think that the private sector obviously has to do that. If they want to continue to be successful in the marketplace, and so I do think there are a lot of learnings there that can be translated into government programs for better, support of the initiatives and the missions of these agencies.
Hmm. And my last question is if you were going to give advice to aspiring leaders, to young leaders, so people in this class are all leaders and they're aspiring to do incredible things in the world, what advice would you give them?
Hmm. I mean, I think it's said a lot, but it really has informed my leadership style and my life as well. But I grew up in a small business family. I have a big passion for small business entrepreneurship and that and the opportunities that it can deliver to communities, to families, and really the nation. And I've continued to pursue areas that I'm passionate about, and that enables me to lead authentically. And I'm not shy about being authentic and passionate about my work, and that carries through as I'm trying to motivate and propel a lot of change, oftentimes in my work and within the organizations that I'm leading. So, I really think that authenticity and passion are just paramount. And I think because I've had my own different entrepreneurial ventures, just that grit and determination goes hand in hand with being passionate and authentic. And so I think it gives you the ability to continue to push and persevere and challenge yourself in ways that maybe you wouldn't normally do. Get out of your comfort zone because you're so passionate about something. I think it's that's something that's easier to do. I think you can think just blindly jump in and pursue something because you're passionate about and you want to make a difference.
Well, thank you so much. I really appreciate taking the time to talk to me.
Oh, you're welcome. It's been a pleasure.